right, good afternoon. This is Todd Mitchell for today's free blog video. I'm giving you a trade setup that it's up to you on whether or not you want to enter it, but I'm looking at PriceLine, PCLN. PCLN, actually, look at this market setting up. Market is pulled back from the all-time high right up in here. We've had a nice pullback actually, 1330 and change down to 1184. As you can see, we're sitting on that pink exponential. It's a 200 exponential moving average. Okay, we're retesting this low right down in here, and my bet is we hold this and we start to bounce from here. So this is what I'm going to do. I'm going to buy the October 17 call, an in the money call at 1175. Okay, so an in the money 1175, which puts us below this low. Right now, as we speak, that is at about $40. Okay, you could buy this call at about $40 to $41. So if you bought one call, it would cost you $4,100. Okay, so this is the play right in here. Okay, so I'm looking for a bounce now. The market hasn't closed yet today, but it looks like we're going to have an inside pattern, right? Today is Tuesday, right? Tuesday the 9th. Today's high of 1200 is lower than Monday's high of 1201.5, and today's low so far is 1183, and yesterday's low is 1178.75. So if you want to be a little bit more conservative, you would wait for the penetration up through today's high, Tuesday's high of 1200. Once you get the penetration up through 1200, then you could go ahead and buy those October 17 calls. But I would stick with the in the money 1175 calls. I'm going to jump ahead of waiting for that penetration, and I'm buying it right now, right in here, and getting filled at about $41 a contract. Okay, $41 a call right in here. Okay, again, markets pull back significantly from the high that was put in place on August 11th, the high of 1329.90. We've come down to what I believe is a reactionary low right here. I call these this is a significant active low at 1183. Yes, we broke through that to 78. We weren't able to sustain it. We bounced. We rejected that number. And so today we'll see if we get any, today is, a down day, but it is an inside pattern, so there's a lot of indecision. And I still believe that we are at a significant point where if the market doesn't bounce and we continue moving lower down through Monday's low by more than, let's say 2 ATRs, then I would go ahead and exit this trade. So my initial stop loss on this is below 1178.75, but I would give it 1 to 2 ATRs. Okay, average true range is below it, which would put us down in here somewhere. Okay, the ATR, the average true range in PriceLine, the 21-day average true range is quite large. Right now it's $19.86 coming into today. All right, so roughly the 1960 area, 1959 would be the initial stop loss. Again, we're doing a deep in the money call, okay? So it gives us a little bit more room, but still it's expensive, right? $40 to $41 you're going to pay for it, but again, I'm anticipating some type of bounce to the upside, at least 2 ATRs to the upside, taking us back to above 1200. 1220 possibly, which puts you right in here anyways. Okay, so that's what we're looking for. We'll follow up on this trade. Have a great evening. I'll be back with you tomorrow. Bye.